Kia ora tātou. Good morning, everyone, and thank you for taking the time to join us today. I'm Namrata Heble, Business Manager at Auckland Business. Welcome to our second Expert Talks webinar on the Business Finance Guarantee Scheme with Nigel Gaudin, the General Manager of Business Banking and Specialist Markets, and Candice Gerritsen, the Head of Borrowing and Savings Business at Kiwibank. Together this morning, Nigel and Candice will talk about what the BFGS is and the difference between the BFGS loan and a standard loan and how it could help you and your business. Collectively, Nigel and Candice have had over 50 years of experience in the financial sector. Nigel has spent a large part of his career in financial markets and saw firsthand the upheaval the Asian crisis, Y2K and the GFC caused, so is really well placed to talk about the recent pandemic-induced market upheaval that we're seeing. And Candice has spent most of her financial career working for the biggest bank in South Africa, which is Standard Bank, where she worked primarily in business banking with a focus on business products and services. So you've got two really experienced individuals here at your disposal this morning. So thank you again for joining us this morning, and I will pass over to you, Nigel.
Great stuff, thanks Namrata, and welcome everybody. My name's Nigel Gaudin, as Namrata said, and it's a real pleasure to be here this morning. Look, just before we get into the main detail of the Business Finance Guarantee Scheme, I thought I'd just give a quick update on really kind of what we've been seeing at Kiwibank and what our customers are telling us about how they have coped over the last 4 to 6 months as this pandemic has played out. And I guess we've been trying to communicate pretty regularly via our electronic direct mails, and as part of that, we have been asking our customers to reply on how they're finding things, both through the initial lockdown and then as things have started to settle down and we've moved in and out of different alert levels, just to try and get a sense of how our customers are faring in this in this pandemic. So really what we're probably seeing is that the first lockdown, everybody was wanting to have a conversation. We talked and provided assistance to well over 1,000 business customers alone. And I think at that stage everybody was just trying to get comfortable with what does this actually mean in the longer term. As we came out of the initial lockdown and we got back to sort of level 2 and then level 1, obviously some businesses continued to find it pretty tough, but a lot of businesses actually bounced back pretty quickly. And we put on the screen here just some confidence numbers around people's perceptions of what they think is going to play out for the general business. And I guess what you're seeing there is 5.5 out of 10. Probably half the customers expecting that business conditions will be okay. The other half expecting that things are going to still be a little bit tough. For their own business, as you often see in these sorts of surveys, people feel a little bit more confident about their own business. I guess the third bullet point there, 60% of our clients are actually seeing turnover, close to around what they would class as being normal, and a good number actually doing better under a COVID kind of scenario than what they were doing pre-COVID. So, I think the thing to take out of this is that it's not all doom and gloom. Yes, there are definitely a lot of clients that are continuing to struggle, but there are as many customers who are actually doing okay. And I think you've seen through the last couple of months, and certainly with the latest lockdown in Auckland, that people are getting familiar with how they operate, how they can continue to trade in various alert levels. And so unfortunately I think this is the new normal, and being able to cope in this environment is going to be key to survival. Xero have also been providing some really interesting insights around the whole SME market, from their July report, certainly a lot of businesses are steadily rebuilding and pivoting to what is the new normal for them. Manufacturing, really interestingly, has seen quite a large increase in growth year on year in revenue. But on the flip side of that, professional services down circa 17% year on year. And so, just probably reflects what we're seeing in our own customer book, that there are certainly winners and losers in the current scenario, and really what we're here to do is try and support everybody as best we can, depending on the situation that they find themselves in. And I guess our reflection would be that every business is different, and so your individual situation is what we're having conversations about, and how we can best help our customers to survive and flourish in this new world. Look, there's been quite a lot of support, and I know it's pretty easy to sit here kind of moving into October and forget about where we've come from, but if you reflect back to March through April, May, when we were in the height of the initial lockdown, the government did come to the party pretty quickly with support schemes. And so you've got the business finance guarantee scheme that we're going to talk about today, but they've also brought about the IRD small business cash flow scheme. The wage subsidies have been a real lifeblood for a lot of companies, and provided that much needed liquidity for the last, what is going on 6 months. From a Kiwibank perspective, we've also had a huge customer care package rolled out right at the beginning of the initial lockdown back in mid-March, and that's been a combination of interest-only loans, emergency overdraft facilities, that type of thing to support our customers as best we can as we move forward. So, I think the thing to take away is that I think it's amazing how resilient business customers are in New Zealand, and I think that the thing to take out of it is that we are starting to understand how to deal with business as we move in and out of various alert levels as this pandemic continues to progress. So we are definitely here to support. We want to talk to customers that about their own situation, and that may well be just a conversation. It doesn't mean that you want to access or need to access support, but conversation can certainly help. So just a quick reflection on kind of where we've come from and what we're seeing, and as I say, on balance, given what we've lived through in the last 4 to 5 months, actually I think the resilience of business is really strong, and there's some real positives to take out of what we're seeing. So we'll move on to talking about the business finance guarantee scheme. Obviously it has changed a bit, so I'll hand over to Candice, and she'll kick us off. Candice.
Thank you, Nigel. Good morning, everyone. It's really great to be chatting to you today. So just in terms of our business finance guarantee scheme, as Nigel mentioned, we had our lockdown from March, so we really have been dealing with unprecedented times. The business finance guarantee scheme was welcomed in lockdown. It was introduced in April 2020. There has been a lot of media coverage around the business finance guarantee scheme, and more recently it was amended, which was in August 2020. What we welcomed is the fact that the new scheme, the rules were simplified, they were broadened, and basically made a lot more accessible for our customers, which has been fantastic. Now, the scheme is very specific. These scheme rules govern things such as the purpose of the loan, who will qualify for the loan, what can the funds be used for. So they are very specific, and Kiwibank, with other banks in New Zealand, have been approved to fill the scheme. One thing I do want to touch on is around the government guarantee, because this has certainly been quite a talking point. And originally, when the scheme was launched, there was a lot of confusion over what did this guarantee actually mean. So really, it's a risk-sharing arrangement, and that is between Kiwibank and the government. It is really going to be called upon when a customer is in a default situation. It's still, though, a business finance guarantee scheme is still an ordinary business loan in that it has a debt component and interest to be serviced, and the customer has an obligation to pay that loan. So unfortunately, it's not a grant. Kiwibank only claims against the Crown if there's any shortfall, and that is after we have followed all our normal collection procedures. So whilst the scheme rules are very specific, it also puts a lot of responsibility on the bank to make sure that we continue to lend responsibly, which means we still apply our normal judgment and our normal lending criteria, and to make sure that businesses are viable when we assess them for the business finance guarantee scheme. One of the first things that really is covered by the scheme rules is around who actually can qualify. So obviously it would need to be a New Zealand-based business. The revenue criteria was extended. Originally it was 80 million, it's now up to 200 million. And it's also quite specific around that the BFGS has to be for the customer of that bank. So for us, it's for a customer of Kiwibank. You also can't have another BFGS with another bank. So you can't, have with two banks at any stage. And although many of you may be residential or commercial property investors, this has been excluded from the scheme, as well as obviously if a business is involved in what's deemed an excluded activity. Now, the obvious one there is around sort of illegal activity, but it also specifically calls out things such as manufacturing of munitions, testing of nuclear explosives, whale meat, tobacco, etc. So in our website, we have got a full details around what are considered excluded activities. And then finally, it cannot be a local authority or council-controlled kind of organisation. So really quite specific. In terms of, why was the BFGS set up in the first instance? So, given that it's off the back of COVID, it's very specific around sort of how have businesses been impacted by COVID. One of the scheme rule changes that happened in August, which again we welcomed, and this is part of the broadening, was really around, why is the BFGS there at all? So originally it was really specific around how have customers been directly impacted by COVID, and obviously then this loan would extend liquidity to those customers. So overall, it still focuses on customers who face some form of hardship as a consequence of COVID. But the broadening is really around sort of asking businesses to think about the impact COVID's had. So it's now saying, how have you responded to COVID? How are you likely to recover from the impacts of COVID? And then how do you position yourself going forward? And I think that positioning of yourself going forward is key here. So it might, in some businesses, means their customer base has changed, or the kind of products that they actually need to sell has changed. And that might mean how they actually now need to position themselves in a post kind of COVID scenario. So this broader definition is really welcomed. And what I would like you guys to all do is really think about your business in response to those three key factors: how you would respond now, how are you likely to recover, and how could this loan help you do so, and then how would you need to position yourself forward. Some of the other changes that came about in the August amendments have been the extension of the scheme. So initially it was only available up to the end of September. It's now been extended to the end of December. And I think, following on from what Nigel said, we are seeing a lot of optimism in our customer base. We're not seeing major signs of distress. Most businesses are able to sort of pivot or sort of regroup post-COVID. However, we are mindful of the fact that there's been a lot of government support packages. There's been a lot of assistance from the bank, as Nigel mentioned, our customer care packages. And these might well have provided sufficient relief up until now. But given that some industries might have a lag, some businesses may not have felt the full impact, this extension really would give you an additional chance to access the scheme. So it is available up until the end of December. The loan size has also been increased. So it used to be 500,000. It's now increased to 5 million. And the loan term has been increased from 3 years to 5 years. And that additional 2 years can really make a difference to a business in terms of their affordability, obviously spreading that capital over a longer term. So that has certainly also been quite a nice welcome extension on the product. I'll hand over to Nigel just to touch on what can you use the proceeds for.
Perfect, thanks Candice. Yes, so what can you fund with the proceeds of a BFGS loan? And the rules from the Crown have again been relaxed in the latest iteration in August. So really, at the end of the day, you can apply the proceeds to business capital and cash flow needs due to impact from COVID-19. So it's a pretty broad kind of definition now. One of the good things that the Crown has acknowledged is that customers have existing debt with their bank that they may be looking to refinance, and the scheme rules now allow for us to refinance 20% of your existing Kiwibank debt onto a BFG loan. We can't apply that refinance though to debt that may be held elsewhere. Another really big plus is if you have a loan that is maturing between now and the end of December, then you're able to refinance that onto a BFG loan to bring about a lower interest rate. So again, another big improvement from the initial scheme rules. And then probably the final one is really, if you've taken any short-term relief or facilities with the bank post 16th of March, so this is just the week prior to the initial lockdown, then any of those facilities, and it may have been, a 90 or 180 day emergency overdraft that you'd taken with us, you're allowed to refinance those onto a BFGS now, provided that support wasn't greater than obviously the scheme cap of $5 million. So look, at the end of the day, actually, the definitions of what funds can be used for now has been widened and strengthened quite considerably, and there is a reasonable amount of flexibility in regard to what can be financed. So, depending on your own situation, we're encouraging customers to pick up a conversation and with their relationship manager and see what might be possible. The scheme rules have, however, continued to maintain some exclusions on what funds can't be used for. So you can't fund dividends outside of your group structure. You can't take proceeds of a BFGS and lend them outside of that group structure either. Obviously, Candice has touched on the excluded industries and activities. And as mentioned earlier as well, commercial or residential property development or investment is also still excluded from the scheme rules. So, at the end of the day, we have a lot more flexibility now with the package, which is a huge improvement from the initial scheme rules. And if you now think, one of the things I guess we are trying to do is get back in touch with customers that previously didn't actually or weren't eligible for the scheme, and having another conversation with them about whether they now meet the new scheme rules. So yeah, back to you, Candice.
Great, thanks, Nigel. So I think, look, cost is always going to be a factor with any borrowing that our customers will take from us. The BFGS loans do have a low interest rate, and we have fixed the interest rate for the full term. So currently it's 2.55%. It does give certainty that the rate won't change for the full term. And in order to simplify it, it is available to all customers at the same rate. Just to sort of put that into some context, it really is comparing very favorably with our home loan rates. So currently our 1-year home loan rate at a special of 2.55, as you can see, is comparable. That is fixed for 1 year though, so we're fixing for 5 years. And to put that in perspective, a 5-year fix on a home loan is 3.19. And if you compare this to similar business lending, again, mindful of the fact that any customer lending would be customer specific, would look at the security, and would also look at the type of product that a customer selects. Our lending for a business loan would be probably in the region of around 3.7 to 4.7. So definitely at 2.55, this does provide a cheap form of funds to our business customers. In addition, there's no upfront costs associated with the loan, and there's no penalty for early repayment. So again, talking to the fact that customers would be impacted differently, you might find your situation now isn't as positive, and 6 months, a year later, you're sitting with a very different scenario. You're able then to repay or reduce that debt without any penalties. And that's really just to align to your business financial conditions as they improve. So having, thought about the cost of the loan and some of the purpose, hopefully by now you guys are thinking around the fact that, could the BFGS be used instead of taking any other ordinary lending? So bear in mind, you've still got that 20% rule where you can refinance 20% of your existing debt, and that alone could give you some additional relief at a lower interest rate. If you're considering a business finance guarantee scheme loan versus an ordinary business term loan, You'd still need to meet the criteria of the scheme rules. However, the BFGS does give affordability, it does give you flexibility, and again, subject to some assessments, you may not need any additional security to actually get your business finance guarantee scheme loan. We've also seen some amendments in the scheme rules around how can we assist customers who were quick off the mark and actually took an existing business finance guarantee scheme loan, however on the old scheme rules. So at that stage, you were only allowed to take one loan. You're now able to take an additional loan or multiple loans. So this also could mean you can take an additional one now. You could also extend your existing loan which was stacked up at 3 years. You can now extend to 5 years, and you can also top it up. So if you took to the maximum of 500,000, you can now extend it all the way up to a maximum of 5 million. So really, just to give you some more food for thought around, how could you plan going forward around the fact that a business finance guarantee scheme loan is really a viable alternative to maybe some of the borrowings you might be considering at the moment. Handing back to Nigel.
Cool, thanks, Candice. I guess one of the things we did want to touch on is, what do we do in regard to assessing your business for a BFGS loan? And to be fair, it's not a lot different to how we would to look at your own existing business for any type of loan. We have an obligation to the Crown that we will follow our normal business processes and in assessing a business for a loan to make sure that we are following the responsible business lending policies and expectations from our regulators, and that we're obviously making sure that you have the means to be able to service the loan. So we go through a full, I guess, history of financial information. We will be looking for how you've been trading in the last couple of years, so your historical financials. We'll be looking for up-to-date management accounts to understand how you've been traveling the last 6 months under this COVID world, and then probably the hardest one is looking at some detailed projections and forecasts for the future. And whilst that may be really hard to look into the next 6, 12, 24 months, it's probably the assumptions that become really key to helping us understand where you're at and how you can get comfort around your projections and forecasts for the future. I guess the final piece then becomes about, okay, with your current debt levels and the size of the BFGS loan that you're looking to take, what's your ability to service that debt and repay that over the life of that facility? And so there is a lot of discussion to go on here, a lot of assumptions to make, but we are here to support customers. We do want to look through the cycle, and it's stuff that you've heard from the likes of the Reserve Bank and the government, that they're wanting banks to step up and support customers, and that's certainly our intention. I think at the end of the day, the insights that you can bring around your own business circumstances is the really key piece to assessing where your business is at. And so we definitely need to have a good conversation about how COVID-19 has impacted your business, get a sense of what other relief measures you've applied for and accessed, and whether that's that might be Kiwibank support, rent relief, other government packages like the IRD, Small Business Cash Flow Scheme, or wage subsidies, just to get a really good picture of kind of what other liquidity have you been able to access to keep your business going since March. I guess, what are your future prospects, that short, medium, long-term view, and have you kind of implemented any turnaround strategies or pivoted in the way that your business operates? And then, really, I guess the combination of that is how is a BFGS loan going to help you respond, recover, or position yourself in the best possible way for the future? And that comes down to, how do you intend to use the proceeds of the loan? Obviously, as we discussed a couple of slides ago, we have obligations to the Crown around how the funds are used. But at the end of the day, the scheme rules have been relaxed so that we can support as many customers as possible as they look to recover from any COVID-19 impacts. And so, at the end of the day, every business is different, as I said before, and really this is about just having a really good, open, honest and transparent conversation around, how's your business been traveling? Where do you think it's going? And how do we get comfort around the assumptions that you've made in regard to your business? Cool.
Thanks, Nigel. So just a reminder to please pop in any questions into the Q&A, as Namrata chatted about in the beginning. So hopefully you've had a little bit more insight in terms of what the Business Finance Guarantee Scheme is all about, as well as obviously those new changes. However, many customers may say, well, it seems like, I don't need that amount, or I'm really not looking for a longer term. So there is some short-term relief that's available. It is still part of our customer care offering to support customers that are needing just that little bit extra support as they recover from COVID. So in terms of the interest only, it would mean switching your existing loan from a capital and interest to an interest only. And this really can give quite a nice relief to a business, and this is offered up to 6 months. The second one would be temporary facilities. So this would be, normally temporary would be defined as 90 days. We are allowing customers to go up to 180 days in the form of an increased overdraft or in a new overdraft. And again, just would give that additional liquidity into the business. You can also, on an existing loan, defer payments for up to 6 months. So those are really what we consider kind of our short-term relief packages. In the medium to longer term, it's about maybe new facilities for the business, and then again weighing up whether it's a new business loan or new permanent facility, or whether the BFGS is that type of loan that you're looking for. So really, I think it's about really understanding your business, understanding your circumstances, doing a little bit of investigation around, what kind of solution would work best. And then we encourage you to talk to your relationship manager. They're well placed, they understand the scheme rules, they understand your business, and really through that conversation and the insights into your business, we'll be well placed to advise in terms of how we can serve you best. There's also a lot of information on the Kiwibank website, so if you haven't had a chance to go and have a look, we would love you to do so. Under the business banking section, there's a whole host of information around how we would support your business, and it's under the COVID-19 support for your business section. So we would welcome, again, just that opportunity to chat to you, to understand a little bit more about your business, how it's been impacted, and how we can assist you. Thank you. I'm going to hand you back to Namrata, but hopefully you found this interesting and given you some more food for thought.
Hi guys. Thank you, Nigel and Candice. That was awesome. We do have a few questions here, so I'm just going to go through them and in order of what we've received. Just a second here. So we have the first question from Peter. Thank you, Peter, for your question. He has asked the following. I'm involved with a company that has been in a startup R&D phase, a research and development phase, and recently launched its product. Each week sales are increasing. We're looking to now grow global sales as the product was always targeted for export, given the market size. The company to date has been funded by its 2 shareholders, but the product has also been patented, so is unique and novel. What would be your typical security requirements given the phase that this company is at? Who would like to answer that?
I'm happy to pick that one up, Namrita. Yep. Hey, thanks, Peter. Look, it sounds like your company's in a really interesting stage, and startups are always a bit of a challenge to fund. It probably does come down to what sort of funding you're looking for. Is it working capital? Is it long-term loan for expansion? And there are a couple of options absolutely for us. If it's short-term working capital, then we may well be able to provide that depending on what the underlying assets of the company are. Depending on the shareholders, then obviously if there's security in the background to support by a guarantee, then that could well help us provide longer-term funding for the company. But also, we've got a good relationship with New Zealand Export Credit. They are absolutely supportive of customers that are exporting globally, and they can provide supporting guarantees to the bank so that we can provide ongoing funding off the back of that guarantee as well. So quite a lot of options for us in the way that we could help support companies such as yourselves. Encourage you to pick up a conversation with one of our managers, or come through to us via our website for a conversation. But yeah, a number of options for us.
Thank you, Nigel. That was awesome. We have a second question from Andrew. So as part of cost cutting to mitigate the effects of COVID-19, one major area cut was planned marketing spend that was to enable growth. Could we use the products from a BFGS loan or part of it to now fund this planned marketing spend?
Okay, maybe I'll take that question, Namrata. So I think, what you've touched on there, Andrew, is really exactly around what we would probably deem as repositioning. Is that very often in times of hard times, people look at what they see as non-essential to their business, but longer term marketing is absolutely essential to any business, and it might have been just a short-term cut. So definitely I would say that's part and parcel of your costs in your business, and that is your marketing costs. And I would say definitely you need to be marketing in order to reposition and basically get your customers to be aware of exactly what you're selling. So definitely it's part and parcel of running a business.
Thank you, Candice. We've got one last question. There's no name, it's anonymous. So this person has said, good presentation team, a couple of questions. Is the BFGS available to new Kiwibank customers, and how would you approach security for new customers?
I don't mind answering that again as well, Namrata. So the scheme rule is very specific that it has to be given to a customer of Kiwibank. So by joining Kiwibank, then obviously you are a customer of ours and we would assess your business. Sort of joining Kiwibank, I think that's the first tick to say, yes, you are a customer of Kiwibank. We would still look at your circumstances. So talking back to the slide that Nigel had up, which is around looking at sort of your financials and then also looking at the impact of the business and the COVID and the insights that you would give us, would really determine how we would assess you. Whilst the scheme rule is not saying we have to take security, again, we would still have a Kiwibank normal lending criteria, assess the viability of the business, and we would look at some measure of security to support it. So if you consider the government guarantee is at the end of a collection process, the bank still needs to be lending responsibly. So we would assess in terms of that viability, and we would also look at how we would put some security in place. So we'd love that opportunity to chat to you as a new customer of Kiwibank to really explain to you how we would assess your business and what options would be available to you. We really don't want to make this sort of a cut and paste. It's really about understanding a business and making sure that we put the right product in front of you. Thanks, Namrata.
We don't have any more questions, so thank you to everyone that answered those questions. I'll hand over to Nigel to wrap up the talk today.
Thanks, Namrata. Hey, well, thanks everybody. That brings to an end today our latest version of Expert Talks, and I hope that you've learned a bit more about the finer details of the updated Business Finance Guarantee Scheme. Look, at the end of the day, really just want to say, thanks for joining. It's not an easy time. We fully understand that. The last 4 to 6 months have played out in a way that nobody would have envisaged coming into 2020. A lot of the conversations that we've been having with our clients have been really positive about where they see themselves going now that they've had a couple of iterations of lockdown and probably feel a lot more confident about being able to operate in this world. Not taking away from the fact that that a number of customers are still finding it hard to operate. And so, the Business Finance Guarantee Scheme, our other support mechanisms, the other liquidity kind of schemes that the government have provided are all there to try and help support businesses as they recover from the current pandemic. And so really just encourage you to reach out, have a conversation, whether you need to access funding and liquidity or not. Sometimes just talking through where you're at, where you're going, how you see yourselves pivoting can be really, really helpful. So really encourage you to reach out and talk to us. But hey, look, at the end of the day, thanks for joining, and all the very best in the lead up to Christmas and roll on 2021. Have a good day. Thank you.